Ladies and gentlemen, welcome to episode number 9 of Old School New World, The Life of an Entrepreneur. I'm your host, Mike Diaz, and today we are honored to have Jimmy Elamad, who is a partner at Y Mortgage at Mortgage Alliance, a previous banker, 18 years with TD Bank as a mortgage specialist, and has been a mortgage broker for the last 3 years. So we'll chat a little bit about that experiences he's had to share that you might find helpful as you go through your journey in your career in whatever it is you might be doing. We'll also probably touch on politics, family, and of course, we both are mortgage brokers. We'll talk about the market and what's going on there for sure. Jimmy, welcome, and it's great to have you with us.
Yeah, pumped to be here, Mike. I know it's been a long time coming. I'm glad that it's actually episode 9. That's my favorite number. So divine timing, maybe?
Yes, maybe,
Right?
maybe.
So yeah, we're going to touch on a lot of things today, and there's a lot of hot topics right now, in regards to what's going on in the world, real estate market, politics, everything.
Yeah. It's good timing in terms of having, you said divine timing, I'm a big believer of that. Before we dive into different things, let's get to know you a little bit better. I know, of course, I talked a little bit about your career path. I always ask my guests, and I didn't tell you I was going to ask you this question. So please share with us, Jimmy, what is your superpower?
Oh, my superpower. I don't think I have any, but my kids might think I do.
I love putting people on the spot.
My superpower would probably be the amount of patience I have with my kids when they're trying to learn something new, mostly athletic, try to do something and they want to play hockey or swimming, whatever the case is, and I'm all in with them. I don't know if it's a superpower, but I turn into like their coach automatically.
Right.
Nothing else matters to me except for, them understanding to have success, whether it's sports or whatever the case is, you got to be all in for that, for the most part.
Yeah.
I don't know if that's a superpower, but
say it's superpower, like patience, and
listen, I'm not patient with them when it comes down to eating or doing homework or whatnot. But when it comes down to something like athletic, because they're so young, they're starting to learn and understand what competition is and whatnot, winning and losing, and what hard work pays off. I kind of just dive right in. I think that's probably. I guess you can call it a superpower.
Yeah, listen,
I can't fly yet. I'm working on my flying ability.
Hey, listen, everyone has their own. That's why there's so many out there. But thanks for sharing that. It just gives us, it's a little bit of fun just to get to know you a little bit. And the reason I put folks on the spot, maybe if they're guests and they've listened, they may know the question's coming, but it's just something to help our audience understand a little more about who Jimmy is and how he thinks. So before we dive into family, let's talk about your career. You and I sort of knew each other a long time ago. A little quick story. He knew a cousin that I had that's passed, and we only realized this recently.
Yeah.
He was a banker for 18 years, a mortgage specialist. Did you start as a mortgage specialist?
No, I started off as a teller at York Mall. At TD Bank. Maybe 19, 20 years old when I started. Progressed through the bank as a teller. Then I went to, financial advisor and so on and so forth. And then I was like, okay, was becoming, a young adult. And I was like, what am I going to do? Do I want to stay at the branch? And I like the idea of going commission-based. And I jumped into the role of mortgage specialist, and I was young. I was very young when I got in that role, so I didn't even own a home. I was still living at my parents' house. Didn't really have much experience, but I had some really great mentors at the bank. It's all about having that mentorship and looking up to somebody that has been in the same shoes in a way.
Right.
I just kind of stuck with it. It was a tough time. I jumped into the rough market, kind of similar to where we are right now. It's hard to get it. To the commission sales and real estate or mortgage. It's a tough time right now. Similar to that when I started. I stuck with it. I learned a lot at the bank, and I did very well. I was, one of the top guys for many years there. Felt it was time to expand, my role as a mortgage specialist, and want to kind of, grow a team and build a real business as opposed to you stay at the bank for that much longer. I want to be able to provide a little bit more options for my clients, and that was the main reason why I did leave. I had a great time there, and TV showed me a lot, but it's time to go.
Yeah, no, fair. And that sort of whole experience, you mentioned commission, like, you're going to commission based. Probably a lot of our young viewers, whether they're a banker now or whether they're maybe a T4 employment, meaning, they get paid every 2 weeks. Commission, of course, very different. Talk about that maybe a little bit about your experience when you were a teller, of course, and working as a financial advisor and then made the pivot.
Yeah.
Was there fear around that? Like, talk to me about your experience going from T4 income to you got to eat what you catch type of deal. So tell me about that.
Yeah, so it was definitely a challenge. Like I think I got a little bit of pushback from my conservative parents. Probably said, you're at the bank, you got a good pension. Don't worry about this. Stay there. Be a branch manager, which is a great job and everything, right? It's just, I didn't necessarily want somebody to tell me how much I was worth. Here, your salary is X amount of money. This is where you're going to get paid. And if you do a good job, you get a bonus of X amount of money.
Right.
Where I was, at the time I was young. I was living with my parents, so I didn't have very many expenses. So I could take that risk. Right. And I was confident in my abilities as well. It was either that or I was going to leave the bank. Really.
Okay.
I think at the time, anyhow. And yeah, it was tough. It was challenging, but I was ready. I was eager. I was hungry. I still am. I still have that hunger.
Right.
But it's more so to help my clients, because I built a big database and thankfully they rely on me for advice and, and support. So at that time, I didn't really have much, but, I had to just learn on the fly. And obviously the commission component was important to me, but it was important because I knew that the sky was the limit.
Right.
Don't get me wrong, Mike.
Right.
I didn't make any money. Like my first couple of years in this business was like, it's take condos at my parents' house.
Yeah, and that's not a big surprise. A lot of young people, older people, whoever's coming into our industry or any commission sales industry for that matter, sometimes think, oh, I'm going to make money right away. And that's just not always the case when that happens, right?
No, I always tell the story, working at York Del Mall for as long as I have. I pretty much grew up there. I remember getting my first commission check as a mortgage specialist at the time. I was like, wow, I got all this money. I was like, what am I going to do with this? So I literally went to the mall and back to my home more or less and spent it all at like Hugo Boss and told me to get up all the gear. And I didn't get paid for like another 2 months after that.
Right.
So, you think it's going to come in waves, but it did come in waves. It's just like, a couple months later, right? So, and I kind of learned at that point where, when you do get, a decent commission check, whatever the case is, you got to kind of just hold on to it, a little bit because you know where your next meal is going to come in a way, right? So I learned that quick and, it was a good lesson for me, right? So I got it and it was gone real quick.
Okay.
So
age has a little bit to do that with you when you're talking about, still being hungry and the maturity about money management. Sometimes you're saying that the commission came in and you spent it, but I'm sure you learned quickly that it's,
I didn't have really much else to spend it on at the time. I was, mid-20s, like where I was either going to go to a club on a Friday or Saturday night or, and I wanted to have nice clothes for it. I didn't have a car payment really. I was, again, no rent or,
Yeah, we have a little bit of similarity there because, I started as a teller as well, TD at 18, went through their training program and what have you. So I understand where you're coming from because that's sometimes the idea of, having not as many responsibilities because, living at home and I had same parents, my parents, I'm the son of cleaners and, they've had a successful business, but they used to take me around and my mom said to me, oh, if you ever become a branch manager, I'll be so happy. And, almost like she manifested it.
Yeah, right. And that was a great job as well.
Right.
So, but
no, 100%. And my parents, I'm sure like yours, were immigrants that came to Canada.
Yeah.
Correct me if I'm wrong. I think that would be the case, right? Different things that they thought was high level, right?
And taking a commission role is a risk, right? So, it doesn't matter what you're doing.
Right. And that's why they were saying, are you sure?
Are you sure you want to go into this? You're doing well at the bank. And, and it just, I kind of wanted to focus on what I enjoyed at the bank, and that was lending.
The lending side.
I loved the real estate side of things.
The investment side never appealed to you very much?
It did for a bit until the market crashed in 2008.
The financial crisis.
Yeah. And I remember a financial planner that I worked with at the branch, she was literally like in tears, just crying one day because she's just getting hammered by clients and whatnot. I was like, you know what? I'm not going to take anybody's money for investments because I can't control the market. I'm going to give people money. I think people enjoy me giving them money, and that's kind of what I do. And I sell money. It's kind of what I do, really. I sell money, or I lend money.
Right.
So yeah, the investments did for a short period of time. And again, it was all timing, right? So
yeah. And so let's fast forward 18 successful years on that side of the business. So what sort of was the pushing point? You've been a broker 3 years now?
3 years now. So I left TD about 3 years ago. It was a tough decision. It was probably about 2 years in the making.
Okay.
I don't know. I felt like I did everything I could do at TD. Like I was number one at TD. I've been on all the trips. I got a TD ring. I did everything I could do there. And when the market started to turn after COVID, rates started to go up, I was only able to offer my clients one product. So I think that was really the turning point. Even though in the back of my mind I said I'm never going to retire at TD,
Right.
not that I couldn't, because I could have. It's a great place to work. It was always in the back of my mind. And when the market turned, it was like time. And you know what? Not only the market turned, my superiors, my sales manager and her manager, and then my associate assistant, they kind of all left and moved on to different roles as well.
Not so much in the broker industry. It's
Yeah.
a bit different.
Yeah, like my sales manager, she retired. My assistant moved on to a different career path. I don't know if I think her title was AVP. She moved on to, left the bank. And when they left, I was like, I think it's time.
Right.
Is there ever time? I don't know. But at that time, I felt it was time and the market was changing.
Well, the best time is always at the time. There's that idea of, I could do it later. I could have done it before. It's meant for you. It's going to happen.
Listen, when you're in your comfort zone, it's always going to be a challenge. And I was super comfortable. Fortunately, he's very successful at the bank as well. It took me 2 years.
Well, listen,
I think a lot of discussions with my wife.
Yeah.
And my, it was a big family decision as well.
Right, of course.
It wasn't just, hey,
You weren't single anymore and living at home.
Exactly. So it was a big change. And so far,
it's been doing well, for sure.
Yeah, it was a big challenge.
Okay.
Yeah.
And then, so talk to me then about when you're making the move and you've decided, what did you know about the move?
Yeah, I didn't know much. I just knew from what I read or heard about from other mortgage brokers or the case is. I was super, I don't know what the word is, let's say, call it cocky when I left the bank.
Okay.
Because I was at the top of the mountain there. And, when I came to the broker space, I was a little fish.
Okay.
Right. So
a little bit of intimidation maybe from the
when I got in there, I felt like when I left the bank, I was like, I'm just going to go in there and stay on the 401. I'm going to be flying, like I was at the bank, but really it wasn't that case. So it took some time to get going and understand the broker space because it's a different world.
It sure is.
Different systems, different policies, different lenders, different people.
Right.
Right.
And what do you think about in terms of being different? Is there a cultural difference? Because, the bank being the bank, it's very corporate. Did you find any different in culture?
Yes, absolutely. The bank culture was good for the most part. There's a culture in the branch and a sales team. You have your own culture of the sales team, so different cultures in different places.
Right.
On the broker space, it was really coming in. I had to really kind of create my own culture, right? You're still trying to do that every day. That was a big shift for sure. Culture is a big word because it takes time to create it. You got to build it. And there's so many different people. It's not just one person. It's 2, 3, 5, 10. Everybody in that room or in that team got to create the culture. It's not just one person alone, right? So we're still trying to build that as well with the team and whatnot. Right. It was a challenge for sure.
Okay. I was saying, you talked about being comfortable and then, it took you 2 years. I think it's important for our listeners and our viewers, especially the young ones or anyone for that matter. It's important to get comfortable with being uncomfortable.
Yeah.
Because, I found in over my career, you probably have as well, the minute you step out of your comfort zone and become uncomfortable, growth happens there.
Yeah.
Whether, it's for your professional life, your personal life, typically good things come from that.
Yeah.
You're living proof, to be an 18-year banker, a mortgage specialist for the majority of that, it takes a lot to make the move.
For sure. Yeah. A little saying that I go by, very similar to what you just said, was I was never going to let fear decide my fate.
Good.
Right. And it was scary to leave the bank for sure, but I wasn't going to let that fear decide where Jimmy was going to end up in 5 years, 10 years, 20 years down the road. Right.
I love that. And I'll tell you why I love that. Pivot a little bit to sort of mental health and well-being. I've discovered that typically those who are suffering from depression tend to live in the past. So that's where depression is. Those who have anxiety, suffer from that, tend to be fearful of the future, right? And so if you can eliminate those areas, then you live in the present, then you tend to that depression maybe you had gets better, your way of thinking changes. Not to say that, you can't think about the fear, but don't allow it to control your fate, as you said.
Yeah. So that was something that I really stuck with me in that whole transition period, because I was super comfortable. But
did you have some people chatting with you? I'm thinking about, young bankers too, or specialists that are thinking of wanting to make a move. Was there someone that tapped you on the shoulder, or was it just something you...
Well, yeah, I kind of got sold as well in a way when I left the bank. My decision was I was going to leave the bank.
Correct.
Again, I was very cocky in a way when I left the bank because I was, at the top of the mountain.
Right.
So I thought I was just going to stay on the 401, fly, like fast lane. But
you ended up on the 407, even better.
I'm on a 407.
Because I remember when I started in the business, again, very similar to you, started thinking about a broker 2 years prior to being a broker. I had this one gentleman, Chris, saw, I guess, a bit of talent and knew, so maybe I was undervaluing what I could do at the bank. And he introduced me to some folks that were in the broker space. When I was in the bank for 17 years, I didn't know anything about the space. Like, I've been a broker for 14, so I left in 2011. And awareness to our industry has grown quite a bit.
Yeah.
Jimmy leaving in 2021, 2022.
Yeah.
So there was even more awareness then. Someone say, hey, Jimmy, you've been...
Yeah, well, I had some friends that were, mortgage brokers.
Okay.
They were always telling me, and they were ex-bankers as well.
Okay.
So there was, come on, let's go. And, again, you're comfortable. Comfortable. And when I finally made the move, it was right here. I felt it. It was right. Mentally, I felt it. Again, like I was at TD for, a long time. Right. So it was home to me as family.
Right.
So it was never easy. But now, being in the role that I have been 3 years now, I've met some great friends. I got some great partners. Obviously you, Mike, is one of them. I met you on the side of things, right? So now I'm starting to create my own culture again here in my own team, my own partnerships and whatnot. Like, we're not even on the same team, but we are a team still. I don't compete with Mike Diaz. You still do mortgages, and we got literally down the street from each other. But, I like that. I like the fact that we can share wins and losses together and help each other. And not that I didn't get to the bank, but it's a little bit different here. I think everybody wants to see a mortgage broker succeed. Yeah,
our industry, I don't think people know it enough. I think there's a lot of beautiful people in our industry, whichever network you might be with. The thing I think is the most important to remember, one of the most rewarding things you can do for yourself, for your peers, is lift up your peers. Even if there's no benefit for you from it, we're very supportive. There is a great community within the brokers. It's not known enough in terms of how great it is. So when you made your move, how have you created your leads for your business? Mortgage specialists, they get a lot of their leads maybe from the bank itself, or maybe they did maybe at first, but maybe it's gone away.
Yeah.
Did that cross your mind?
Being in such a huge corporate world and being in the bank for as long as I had, of course I got some business from internally, people that I worked with in the past, whether we were tellers before, and now they need a mortgage, or their parents need a mortgage, or so on and so forth. So yeah, you're always going to have that, but they're my connections. They came to me anyways, right? Right. I still find that. Same with clients. I still deal with TD daily, but now I have more options for them, and that's what my clients are happy about, for the most part. So my database was obviously, my toolbox in a way, right? I contact my clients, providing them knowledge, providing them insight on what's going on in the market, giving them options. I'm being just truthful. I'm not a pushy sales guy. I've never been that way. I'm not trying to sell you something. I'm just trying to give you advice and you make the right decision. Like you say, hey, Jimmy, I'm up for renewal at XYZ Bank. This is what I got. Can you beat it? If I could beat it even by slightly, I'm going to tell you guys, just renew where you're at.
Right. That's a great thing to bring up, because I've said before, and I'll say it again, the minute you try to chase money will always outrun you. You can't catch it. So to do what's in best interest of your clients and friends.
I want you to contact me, call me, ask me for advice. Right. I'll guide you the right way. That was part of my career at TD as well. Like, I was a teller, then I was a financial advisor. I did investments, I did RSPs, I did everything. So all
bank accounts,
everything. So it was very important for me to have my clients come and ask me for anything. Ask me about RSPs, ask me about this. I wanted to have a little bit of knowledge and everything. That way I knew that I was their go-to. Anything bank related, I wanted them to come to me. Right. And they did. And they still do so. And that's just relationship.
Right.
It's all about relationships.
So if I'm hearing you right, then it's, you've positioned yourself as, an advisor and someone who gives counsel and advice, as opposed to something a bit different maybe that others might. That's how you've built on and continue to build on your business.
Yeah, exactly. That's exactly.
Amazing. Yeah. Amazing. So before we turn the page on that, so if you were to talk to your younger self, you've probably heard this kind of question before for sure, what would you say to your younger, probably more handsome guy? No, just kidding. Men in general and women as well do age like a fine wine. It's always better. But what would you tell your younger self if you were giving advice to him?
Enjoy what you do. Really, I love my job. I enjoy what I do. So for me, it's not work. During that transition, maybe, in a specific time, you're never going to be too prepared or over prepared, or you're always going to leave something out. You're always going to say shoulda, woulda, coulda, I think. And, don't let fear decide your fate. And that's kind of what I did. And then would I change anything? It's hard to say looking back now. Would I change anything? Not really. You're always going to say, I should have got this. I should have did this. I should have did that. But the work you put in your life, and regardless of what you do, whether it's athletics or school or whatever the case is, you put the work in, good things will come back. Yeah.
And then that's well said. And, because I think about that question for myself as well. And like you said, it's going to happen the way it should. But if we're going to pass along any kind of little tidbits,
Don't be scared.
Don't be scared is number one. Fear is not your friend for sure. If you're in the bank, how long you're going to stay there. So for one of the things I would tell my younger self, I spent 17 years, 7 with TD, 10 with Scotia. I would say, I think the corporate environment is good. You learned a lot.
For the most part, yeah.
Yeah.
Yeah, but again, they build that culture, and there's a lot of people from different worlds and different.
100%. And I think you can learn a lot. You can learn, I've said this before, learn from bad leaders, good leaders, and the corporate environment, as one of the big banks does. But, I wouldn't need to stay. This is, again, me talking to my younger self. I would probably max out stay is 5 years, 6 years maybe, but 5, I think, would be my cap. My son, Nathan, he wants to get into the broker industry. His mom and I both agree that I think starting at the bank will show him a little bit of discipline, right?
Absolutely. Just so you know how to do things the right way.
Right.
You get trained properly.
Yes.
They have obviously the training.
Yes.
That's a great idea. And I think for Nathan, absolutely, you should.
Yeah, like that. So that's just the idea. If you're a banker or you're in the mortgage space, think about that. How long you've been there and maybe what you want for yourself. Because, set the right goal for yourself. Think about that. And then, reach out to Jimmy, reach out to us. I'd love to give you more information on that aspect of things. So let's turn the page on that and let's talk a little bit about the wild, getting a little more into the nitty gritty about
Wild West.
About the wild west, about the mortgage business and what's going on. Maybe we'll start with, the impact of tariffs and what you're seeing with your client base and what are people, when they are reaching out to you and asking you different questions, what are they thinking about?
Yeah.
What's on their mind?
I think it's all about confidence right now. There's no confidence right now in the market. There's no confidence in anything. We're currently in an election period in Canada.
28, folks.
Yeah, go vote. So obviously with the tariffs on again, off again, like who's impacting, who's not impacting. There's so much uncertainty. So it's impacting consumers' confidence. The rates are literally up and down, up and down, up and down. Like you'd think Bank of Canada has dropped the rates so much since the peak that people would be out in droves buying, refinancing, just like crazy. But it really hasn't picked up as much as
not at all. Yeah, there's people have been crying about it.
Yeah. And luckily, we've been in the business for quite some time.
Yeah.
We do have a good portion of our database, that is still active and moving or selling or refinancing the cases. But obviously, look at the for sale signs. There's a lot of them. Look at the market.
And then, there are some for sale signs, but there's also sold signs. So there's some activity.
There's always movement. There's always going to be movement.
Yeah.
Always got to move and sell and refinance. And, but I look at it, there's opportunity right now. I think there's a lot of opportunity right now to maybe buy your forever home that, you're not going to compete against 14 other offers, right? We did in the past, right? So I think there's an opportunity there. I think, with the stock market, even if you want to, investments, like the days that they're dipping low, those are the days you got to buy.
Yeah, no, for sure.
Right.
Sure.
And again, it's a yo-yo. It's up and down, up and down. So I do think there's opportunity. However, there's a lot of uncertainty as well. Right. So with that being said, we'll see where things go. I think we need some stability in our economy first in regards to, political. Once we get a permanent prime minister, right now we have one, but, it's just kind of an interim, right? So once we get a prime minister, hopefully that will steer us out of this mess for the most part.
I will say, on the political front, we were talking about, the election coming up. My own personal opinion, so hey, for what it's worth, I do think we need a change of government. I'm not saying who I'm going to vote for, but, Mark Carney, he's really a globalist. He's been all over the world and he has a lot of friends all over around the world. What I mean by globalist, now he suddenly, became the prime minister through the process that they had. But I don't know if that's what we need exactly because, the Liberals have ruled the roost for a long time. Yeah. Maybe we just need something different.
Sometimes it's important to have a little bit of change, a little new fresh blood. Absolutely.
Yeah, I know for sure. Back to sort of the market, are some of your clients that are reaching out or looking, pre-approvals that you're doing, are they looking for certain types of dwellings? Like, what do you find?
Yeah, definitely the rental property purchases have dried up. Like, I'm not getting a lot of investors.
Okay.
Few and far between.
And what type of investment properties are they buying? Is it your typical like detached triplex,
a landlord per se, that's their business more or less. That's part of their business. That's how they generate income. And so, of course, with people always, want to buy rental properties. But before, when the market was hot and the rates were obviously lower and there's less uncertainty in the world and the market, everybody was buying, rental properties. And, right now, I find that it's not as busy on that front. Any of the mortgages that I am doing or purchases, majority of them are for end users, people that are buying for a family home or a new home or whatever the case is, right? They're buying it to live in, not buying it as an investment.
Okay.
That's what I'm finding right now. Obviously, renewals, refinance.
Those are massive, especially over the next 18 months, are going to be even more. And then what about condo market? Have you had clients buying condos?
That's a tough one right now because there's so much inventory. So there is a lot of great buys out there. But no, definitely the condo market. Again, we live in the GTA, we live in Toronto. It's tough to get into a single family home. For a starter, they're moving to condos for sure. Absolutely. So I am doing some condo purchases for sure. Not as much as before.
So let me ask you about this. Have you come across any new construction ones that bought 2-3 years ago?
Doing a couple right now.
Have you found issues with values? Because you know what's happened. They were buying at 1,200-1,300 square foot.
Yeah.
So when you're buying in 2021, 2022, they thought, oh, it's just going to keep on going up.
Yeah.
And so they were buying at a certain per square foot cost. And then lo and behold, they go to do an appraisal today. What's happening is, oh, you bought at 1,100, 1,200, 1,300 square foot. Now it's only 950 a square foot. Have you seen any?
Yeah, values definitely have been impacted, especially when you bought at the peak on paper, on spec. Right? What was happening in the market found that the builders were selling them at a projected price for when they were built.
Of course.
Right? So that's impacting it.
Because they thought it was just, nothing's ever,
Well, that's it. Because it's constantly going up. I was like, wait, things aren't going to drop, right?
Yeah.
Rates were, sub 2%. Foreign buyers were allowed to purchase as well, which impacted a lot of the market. That's why a lot of condos are empty.
And, the one thing that Trudeau did probably a year ago now, the students coming in. So he took away the students.
Yeah.
They were coming back. They limited the amount that were coming in. That was impacting on some of that. Have you had a live example of you got a person bought for A and now it got appraised at B?
Unfortunately, yeah. I've had a couple.
Yeah. Is it large spreads what you're finding?
Yeah, the large spreads are, I think, mostly on the condo market. If you bought something, like I said.
I think the low rise, like detached townhomes, new construction, I think they're still fine.
Depending on where, for sure. The value has been impacted a little bit. Again, it all depends on what you bought.
Correct. The ones that are coming up now, so we're into 2025, the ones that were bought in like 2020, 2021, maybe 2022, depending how quickly those projects, again, there's still a lot more coming online next year, for example. There's one here not too far from where we're doing our episode that'll be done sometime in 2026. But so what the values, like, what have you seen? Let's focus primarily on the condo market because that's what we're talking about.
I think depending on when you purchase the condo, the thing with condos is from the day you purchase it to the day it's actually built could be 8 years, some condos.
Oh, yeah.
The worst depends on when you bought it.
Yeah, it's worst case for sure.
Right, so if you bought it, let's say 8 years ago, you're still okay, you're closing now. I just did a bunch of deals at Time and Space, downtown Toronto, and those values were good. Even though they bought it years ago, the values were still even coming in higher than their purchase price. But then you buy something like Nobu, for example, which was the first condo that ever sold for $1,000 a square foot.
Right.
I did a couple of deals there. The values were like a little bit lower. Some of them were either lower or right on par. And then there's other properties that I've done, that the values are, we're talking, like $100,000 lower than the purchase.
Yeah. So I had someone reach out to me. They bought a new construction condo in Whitby for $760,000. It was appraised at $608,000. Okay, it's a big difference. We tried to figure out some solutions, and thankfully he was in a position where he could close because there's a lot of buyers out there that are really in a tough spot. And going through all of this, the client got an email from the site developer because every new construction project, and you might be familiar with this for sure, has financial institutions that are associated with the project from the beginning, and they do that as they're either So thank you very much. Stole my thunder. So got in and said, hey, RBC for this particular project has a blanket appraisal on the whole building. They're doing the values on the purchase price. That was a bit of news to me. I didn't know. It sounds like you did, so I would love to hear more about how to explain, because that's a benefit. Because now my client, I've referred off to someone that I trust and like at RBC to do this transaction, because as mortgage brokers, we don't have access to RBC. And thankfully, he doesn't have to, shell out $140,000 because there's this blanket appraisal on the property. I suspect, correct me if I'm wrong, you might know a little more, maybe the developer has a really good relationship with Royal Bank and they're doing it to protect. Because like you said, long-term, I think real estate will always be okay. But talk to us about this. This was news to me.
Yeah, so appraisals, which I'm very familiar with at the bank.
Right.
Being at the bank. So essentially what it is, they do the appraisal on spec. They hold their database, for example. So whatever bank might have been on site, well, in this case was Royal Bank, they would have done their blanket appraisal when they launched the project. And they valued each unit at X amount.
Right.
And typically those blanket appraisals, again, every bank's different.
Of course.
So typically those blanket appraisals, if they're up to date, the value should be there.
Okay.
Even though it's not really the true value. So
Right.
really, in my opinion, I think Royal Bank's at risk here.
I agree.
Because today's market value is $300,000, for example.
Right.
And RBC did a blanket appraisal in 2021.
Right.
And they're saying it's worth $450,000.
Right.
That's a big spread, right? So who's at risk here?
It's for sure the bank taking on the risk.
But not only that, think about it this way, Mike. The client is now leveraged. Because the client wants to sell. They're not going to pay off their mortgage.
Correct. And I agree with you. But they say maybe you kick the can down the road a bit in a case like this.
You have to hold on to it.
Correct. And my client, he was buying it as a rental property. So he already had it during occupancy, had it rented. It doesn't make it okay. But to your point, if he decides to sell, and we've had this conversation a year from now, 24 months from now, it might not be enough. But maybe the silver lining, if he had to pay out 140 today, if this didn't have a blanket, maybe 2 years from now, if that's what he wants to sell, he'll only have to pay out 70,000. So maybe half. Now, I'm not saying the value would be all there. It may help mitigate.
For this specific, scenario, worked out for the client.
Correct. It's worth, exploring. If you have clients or you're in the situation, I think it's worth exploring if this is an option to protect you. Even again, like I said, to kick that can down the road a bit. If I have to have a loss, and this is what we're talking about, a loss in the real estate market, I rather, mitigate or lessen that loss. Yeah. And maybe this is a way of doing that. So I didn't know about that.
Yeah, again, every bank, the way they do the bank appraisal will be different. I think as you update the appraisal throughout the duration, maybe the value is lower.
Right.
And maybe the bank does evaluate it lower. So, but it's hard to say.
Yeah. It's funny because if somebody's moving into a condo and they're putting less than 20% down, CMHC or one of the insurers that we have, Sagan or Canada Guarantee, seems to be approving those values too. So maybe it's the same type of blanket.
But you can't get an insured mortgage on a rental.
No, of course. And it's just only in specific circumstances.
So somebody's got to take the risk. Yeah. If it's the insurer or if it's the lender.
To your point, clients absorb some of that risk, but they're absorbing it. And they might have to pay it down the line. So it's an interesting time. And that's, a sign of the times of what's happening with the market. But I will say, you have a lot of, I believe, realtors within your circle. Yeah. Their opinions on the market. What are they saying about it?
Yeah, I think a lot of realtors, again, there is opportunity, right? So there is opportunity. They are working hard. Homes are selling still. This is where you put your work in right now. Right. It's like working out in the winter and then right? So I think you got to put your work in now and kind of come full circle.
Yeah, I think it's important for folks to remember, and I've said this before, I believe part of a problem in our industry, there's too many paper pushers and order takers. We must do our clients a favor and provide counsel and advice because I will tell you, clients and consumers out there are craving counsel and advice because, to Jimmy's point, the uncertainty that's existing in the market. It's sensitive to the time because I know you have to do this great. You're the secret story guy today for your daughter.
Yeah, I got to do that stuff. I'm reading 2 books for my daughter at school. So
that's amazing. So as we wrap up, let me give you a prediction. Don't worry, I won't hold you on the fire. Between today is April 22nd. This is recorded on April 11th. Between April 11th and the end of the year, what's your forecast on interest rates in particular? And I will sort of give you my 2 cents as well. Yeah. Where do you see it?
I think Bank of Canada will continue to drop prime rate by the end of the year, at least 0.5%.
Okay.
By the end of the year, I think, in the last reporting we had, inflation did tick up a little bit. Okay. I personally don't want rates to go too far down. I think a good balance is good. Okay. So I do see maybe about 0.5% by the end of the year, at least.
Minimum. Okay.
Obviously, what's going on in tariffs and whatnot, if it really impacts our industries and the auto industry, steel, and people are starting to lose jobs, then obviously, that could completely change. Correct. Right? They'll look on rates in general. Correct. But I do think, by the end of the year, I think rates should all be in the 3s. I think, fixed rates, variable rates, I think those should be in the 3s. Okay. Who knows? Maybe anywhere from 3.1 to 3.9, depending on the term. Right. But I think they'll be in the 3s. I think having a 3 in front of your rate by the end of the year is good.
Right.
We're almost there right now on the variable.
Fair.
One more drop. I think the majority of the people that are in variables will be in the 3s.
Yeah. If you're in a prime minus, anywhere between prime minus 75 to prime minus 95, and there are products out there, next week there's an announcement. If there's a decrease,
in the 3s.
You'll be in the 3s. So My look on rates where I think they're going to be, and again, we're not holding each other over the fire. I think the prime lending rate will be down anywhere between 0.5%, as Jimmy says, to about 1%. That's my range where I think it's going to drop. You're going to see that by the end of the year. To his point, a lot of the tariffs and different things, economic growth, unemployment. We had the first loss of jobs since 2022 in the job numbers. And so that's the first time in a very, very long time. So that, impacts the Bank of Canada driving rates down. So that's sort of my thought. In closing, I think you're going to revert back because people have short memories. The last 4 years, fixed rates have been lower than variable. Yeah. But remember, historically speaking, variables have always been lower than fixed. So you're going to see that for sure. So I think, to your point, variables will be mid threes, high threes. I think you won't see a huge amount of movement on fixed, maybe a little more down, but I still think, yes, I think is what I'm saying. So you took up a lot of time, Jimmy. Thank you so much. I want to extend our gratitude to Jimmy Elamad, who is a dear friend of ours. Thank you for being a guest.
Hopefully I can make it for another episode.
Yeah, absolutely. We're going to continue to grow Old School New World, Life of an Entrepreneur, because the purpose of what we do is to help other young entrepreneurs who are looking to get advice, guidance, and hear different information from different people. Thank you again, folks. Really appreciate everyone for tuning in. Don't forget, if you haven't done this yet, please remember to subscribe and like so you can continue to follow along. Help us build what we are doing here at Old School New World. We appreciate you and thank you so much.